What's up guys, welcome back to another day trading video, and today we're going to go over not taking a trade. Alright, you have to know when in order to not take a trade, because essentially taking a trade every single day doesn't mean you're maximizing your profits. No. You want to avoid the days where you're risking too much, or where it's not smart to even take the trade. Alright, there's days where you shouldn't be taking that trade. Alright, and these are the points, these are the things that we should avoid. All right, pro traders do the exact same thing, where they avoid these points because these are the points where trades are most likely not going to be profitable. All right, where most likely it's gonna hit our stop loss, or we're just gonna be annoyed by the trade, or points where we wouldn't want to be. All right, so we're gonna avoid these things. All right, pro traders do the exact same thing, so they have more probability to be profitable. All right, essentially, like I said, the more trades you take isn't the better. All right, there's a trader, Palatine, like a long time ago, he only took 8 trades within a month and he earned millions. All right, he only took 8 trades within the month. That's 2 every week. All right, so on Monday and Tuesday he traded maybe, and it took the whole day off. And actually, for a trader, taking less trades is actually better, because if you take a trade on Monday and won on that, but you're seeing bad price action or market's choppy, and you take the whole week off, you basically have the whole week off of your job. Now your job does consist of your performance. You need a trade to win money, but if you get into the charts with trading, if you get into the charts and actually lose money, then your week is kind of bad. All right, it's depending on you. So how do we come back? How do we fix that? How do we stop those days where we're losing? All right, because you're probably losing from these points right here, where you're trading on these days, and that's not the smart thing to do. So let's go over them right now. All right, first is a bank holiday. Thursday was a bank holiday. I'm pretty sure. Yeah, Thursday was a bank holiday, and I just saw there was no volume at all. No people trade. So on bank holidays, not a lot of people trade on those days. So there's not a lot of volatility going around. So the market's just choppy, and I saw it for myself. I saw it, and I was looking at it I was staying there for 20-30 minutes, and I saw that, wow, oh yeah, it's a bank holiday. Why am I even on the charts? Shouldn't be even trading. All right, I saw that. Thankfully, I didn't take the trade. I avoided not taking a trade. All right, so I realized it was a bank holiday, and it showed that it was bad price action. All right, another is not following your bias. So if you think the trade is going to go up, but it's showing you that it's going down, then you just have to step away. All right, because your bias was to go long, but it's going short, so there's no opportunity right there. All right, or a 1 hour, or you go into the 1 hour time frame and see that it's telling us different from information than in the 4 hour. The 1 hour may be telling us that we're bullish, while the 4 hour is telling us that we're bearish. So if those two are correlating, then something's off, and the direction can go either way. All right, I'm not going to leave it to 50-50. I'm going to leave it to where I think the trade is most likely going to go. If the 1 hour and 4 hour are both showing bullish, then I'm going to go bullish, and there we go. Now we have choppy price action, where price is just barcodes. You can see going up, red, down, green, red, green, both in the same price range. All right, or essentially just ranging. All right, and ranging in the same price range. It's showing barcodes. We do not want to be in that, because we don't know where price is going to go. That is undefined. There's no higher high. There's no lower low. There's no defined higher high or lower high. We can't use. There's no information that we can use that is useful right there. So we want to entirely avoid it. Avoid it entirely. Choppy price action where it's not clear in the direction where it wants to go, then we avoid it. And if it isn't following your strategy, if it's doing choppy price action, or it isn't following your strategy where it goes up and then all the way down, down and all the way up with no retracement, because my strategy falls on retracement, then I'm gonna avoid it. All right, it's not following my strategy. Boom. There was a day where I think on Thursday where it went up. No, no, it was on Wednesday. No, Tuesday. There we go. Sorry. On Tuesday where it started going up, and then all the way down there was no retracement, so I was like, fine, whatever. And then it went all the way up, no retracement, so fine, whatever. There was no retracement on both, so I just avoided that day, did not trade that day. All right, and if I did, I bet I would have lost too. And time limit. All right, so if your time limit is only time limit is only 30 minutes on the trade and 30 minutes on 30 minutes on the charts and 30 minutes on the charts pass, you've been on the chart for 30 minutes, then call it right there. All right. If you have an analysis or a criteria or analytics showing that if you trade it for more than 30 minutes, you're most likely to lose, then you're going to follow that rule and say, if 30 minutes is passed, I'm not going to trade anymore. Or for me, once it hits 11, I've been on the chart for too long, and I'm just going to call it for the day right there. All right. So set a time limit for yourself. It can be from 11, or it can be from 10, or you can set a specific time limit. I'm only going to be on the chart for an hour, or 30 minutes, or 2 hours. All right. I say more than 2 hours, kind of crazy. Right. 9:30, 10, 10, 11. I kind of do 1 hour and 30 minutes. See, so more than 2 hours. Yeah, who knows? Um, Big news events. All right, when you see these big news events, like I showed you how to read the news. We have CPI, PPI, FOMC. Big news events like those, you have to avoid it because unlike bank holiday where there's no volatility, volatility. I'm spelling that horribly. Sorry about that. On the days where on the bank holidays where there's no volatility, on the big news events, there's too much. I know that's sideways, but there's too much volatility. All right, there's too much. We're going up, down, up, down. It's not following your rules. It's just gonna spike all the way down. You would have never saw it coming if you was along in that trade and it was a big news event and it went all the way down. You would have lost way more because it skipped your stop loss and just taking you out way more than you could afford. Or if you was in a long and if you was in a short and the price, and because of the big news event it went all the way up, you would have lost way more. All right, learn to not trade on these events. All right, big news events, because they're very, very dangerous. Like exactly like I showed you, if you was in a long, the big news events can make you just go all the way up, and let's say your stop loss was right there, you would have been canceled out right there, way above your stop loss. Or if you was in a long, right? Oh no, sorry. Yeah, it's long, and you put in the big news event, boom, goes all the way down, and your stop loss is right here. That's essentially the same thing as a long. So a short, and price goes all the way up, your stop loss right here, but sorry, your stop loss is right here, but price went all the way up. That's I'm confusing myself at this point. I'm not gonna lie. The point is, do not trade on the big news events because they don't tend to be. They are very dangerous. All right, you have some traders who do trade it. The pro traders. If you're a beginner, then I really wouldn't recommend it. I try to avoid big news events myself. Sometimes, I'll be honest, sometimes I don't. Sometimes I do trade it, but yeah, just overall, you want to go into the market not wanting to trade. All right, you want to go in like, I don't want to trade, because if you're not trading, then you're not risking to lose money. If you go into a trade, you're risking to lose money, but you can risk to win money, but at the same time you're also risking to lose money. But if you're going into the trade, the market not wanting to trade, you're not wanting to lose. You're going to the market not wanting to lose. And if you're not wanting to lose, you're going to the market not wanting to win. But if you're going to go into the market not wanting to win, it's the same. It comes with not wanting to lose as well. All right, you have the risk of winning and losing. All right, so if you take one, you also take the other. If you take the other, you also take the one. All right, so if I go into the market not wanting to trade, then I'm going into the market not wanting to win or lose. But since I'm going to the market not wanting to lose, I'd rather take that. All right, because if I lose, it's really, really bad. Like, the effects of losing are way more bad than the effects of winning. All right, and there's nothing bad about winning, but the effects are just greater. All right, but yeah, that is it for today's video, guys. If you liked the video, please like, comment, share, subscribe, and I'll see you guys in the next video. Peace.